What's your most non-consensus view on any commodity?
One of the things at Project Blue that we've been looking at is copper. I think an interesting thing for copper, the extent to which scrap is going to play a part of that. I think maybe an understanding of the scrap market is lacking in certain segments. So I think that's one to watch.
JD, we normally just, I don't know, we rarely talk about a lot of niche metals. And when we do, we don't really know what we're talking about. So thankfully, we've got someone with us today who's going to help us understand 10 of the most niche, but we call them critical metals that are in the headlines everywhere. Why? Because they're geopolitically relevant. Some of them have just absolutely soared in price in a very short period of time. We're seeing announcements come from the White House that is backstopping production of a lot of these things. They couldn't be any more relevant than they are right now. And Jack Better, for a living, runs Project Blue. These guys model supply and demand. They do an excellent job at that of all of these various commodities. Jack Better, thank you so much for joining us on Money of Mine.
Thanks for having me.
Thanks especially for coming today after I ruined your event last night.
You made for an engaging and spicy panel, so I think everyone was grateful for your presence, Trav.
I think the mistake is on you for allowing me to have a microphone. You should know the damage I can do with one of them.
It's dangerous to give you a platform, I've heard. I found that out the hard way in front of a live studio audience, right?
I don't know why I'm reciprocating the favour now.
We're going to talk about 10 of, as you said, Trav, the most niche but hottest metals in the world. So why don't we kick things off with antimony?
I think it's an interesting one, right? So, I mean, if we go back to before the export restrictions, it was already a tight market dominated by China, as you say. And on the supply side, I guess Chinese grades have been dwindling, production's been ticking down. So other countries like Myanmar, Tajikistan, they've been filling the gap. So already a tight market in China. Demand for antimony spread across a few things. You mentioned solar PV. That's the new growth market, but it's mainly flame retardants and lead acid batteries. So a tight market growing steadily, prices ticking up because of that tightness. And then, it gets interesting and sort of embroiled in this chip wars narrative, and you get export restrictions and then finally an export ban to the to the USA. And prices get pretty spicy in the West, right? Sitting above $60,000. I think they might be about there now. And
that's like a 6x on what it was a couple of years ago or something.
I think, compared to long-term norms, absolutely. And I think that's because, some of these things that have been banned or restricted doesn't really matter much of that material doesn't make its way to the US, but the US is a big consumer of Chinese antimony trioxide in particular. So it all became about where's the US going to get this material from? And you get this really interesting play in sort of Southeast Asia where everyone's scrambling to take the opportunity to sell into this Western market, right? So you've already got China desperate for material. Myanmar ramps up to sort of target this Western market. That material doesn't go to China, so it compounds the tightness. That material makes its way to sort of Thailand, back to Myanmar again, and you get a few places, Laos, Cambodia, Myanmar, producing ingot, looking to target an eventual US market. Thailand sets up some ATO smelters, looking to send that to the West, which works a little bit in Q1, but eventually the Chinese owners of those refineries shut it down. So that's out. And now what you've really got is sort of new feedstock from those places I just spoke about, getting converted into ingot in Southeast Asia, making its way to Europe, France and Belgium, then transferred into trioxide and then makes its way to the US. So the supply chain sort of scrambled to make things work. And now looks like export restrictions are going to be repealed, right? So next year might look completely different. So I think in answer to your question, how frothy is it? There was a structural tightness before, so I think things will come off, but the underlying fundamentals still mean that, China's desperate for the material, could support reasonably elevated prices for a little while.
How long have you been working in commodity markets, Jack? It's
2012 probably started.
So the cure for high prices is always high prices because new supply comes online. And I think we've been reluctant to actually really embrace antimony because it just always felt frothy. It always felt very, very hype heavy. And whenever something kind of goes 6x, you're just struggling to make an assessment. Is this a structural change in the market, or is this new supply just going to flood the market?
And on the other side of that is some destruction of demand, right? And for flame retardants, which are, let's say, 60% of demand, I don't have the exact figure. If you get to a certain point, which is somewhere between, let's say, $15,000 and $20,000, yeah, you'll start to see substitution in flame retardants. So that'll help soften prices, as will, as you say, new supply coming on. But it might be a little while before that new supply can enter the market. And then in today's world, it's always, is it the right supply for the consumer, right? So yeah, new projects may be here, the USA, but we'll see when they enter production.
And to be clear on those export controls for the three commodities we mentioned, these all fall under that dual use ruling because they're used in munitions and various other military applications, right?
Yeah, I think someone did a study, like 300 different military applications for antimony. So it's in munitions as well as flame retardants, lead acid, and solar PV.
It's really interesting, right? Because that component of the market is such a small portion of what's already a pretty small market in antimony, but it's just that slither that's used for those things, and then the Chinese group it under that basket because they don't want any of it going that direction, right?
I think, that's one way to contextualize it. And on the flip side, people get very animated about things because they're in military applications for obvious reasons. But tiny slithers of the market in a tonnage term.
I did hear that historically, if you measure which commodity prices move the most, like go up by the most during periods of war, antimony is number one, and it's like night and day between number one and number two.
Okay.
Yeah.
I would have thought tungsten might be up there as well. It's another
Tungsten
one
number
that
two.
you sort of think of.
Shout out DK with this fun fact.
Both of them have been flying.
Yes. Yeah.
Commodity number two?
Commodity number two, cobalt. Oh, before commodity number two, is the narrative, is it overrated or underrated versus reality? Market sentiment, overrated or underrated?
Can we have a middle section for this one? Because I think it's hyped, but there was a structural tightness before, which I think will endure.
Neutral.
I want 3 categories.
Okay.
Okay.
I'm sorry, it's your show.
Moderately rated.
Moderately.
Cobalt, mate, this was like uninvestable a while ago. I saw a chart the other day that like the 12-month price performance of cobalt has like trumped all of the other like mainstream LME metals. Remarkable.
As the DRC has subbed themselves out of the game.
We're talking about export controls again, yeah.
So 70+% of the market comes from the DRC. Huge mines were coming online, Kisanfu and a few others, CMOC-owned operations where it's just a byproduct, so just completely flooded, as well as the Indonesian nickel supply that came with a lot of cobalt, as I kind of understand it as well. So you have a price that was actually pretty elevated, 21, 22, came off kind of dramatically. You've also got that background narrative of, BMW, Apple, these companies talking about how they want to remove DRC-supplied cobalt from their supply chain. So what's the kind of state of play here, Jack, and how do you kind of see it?
I think it's a great summary. So, things were in the doldrums for a while for cobalt, right? And the price got very, very low, and that's because of oversupply. Indonesia's right, but it's all about huge ramp-ups in the DRC, a few different actors, but mainly Kisanfu, Tenke Fungurume, and people are targeting the copper there, but cobalt's coming along for the rides, and you get to a situation where there's absolutely buckets of the stuff overhanging the market in mainly hydroxide form.
We saw this.
Different numbers.
Yeah, we visited a few mines in the DRC, and you just see like sheds and sheds full of cobalt hydroxide because the market prices at that point in time were just not sufficient.
They'd be there at every producer I visited. They'd be in Zambia, there'd be ports in South Africa, there'd be at places in Asia like Malaysia. So just people have different figures, but maybe let's say 100,000 tons overhanging the market. And this is bad news for the DRC government because they get a slice of the pie here. So despite production absolutely ramping up between 2023 and 2024, their revenues more than half. So they feel they need to step in, I guess is the idea. And there's a export restriction which comes in, I think, was it February this year? Still loads of material overhanging the market. So it's taken quite a long time for that to be burnt away. You still had some material leaving after the February ban as well that was already allowed to leave. You had a ban extension, and now you've got a quota system where they're sort of saying, I think it's around 95,000 tons of material can leave next year, and they can reevaluate that. So based on our forecast for demand, and as you say, it's the growth rate expectation for cobalt isn't what it was 5-6 years ago with new cathode formulations, things moving towards nickel manganese or whatever else might be. But with our view of demand now, which is still pretty bullish, cobalt's a key part of the battery trend. It's also used in magnets and other things. It's going to be a pretty tight market for the next few years if demand projections are anywhere near what we think they'll be.
Interesting.
Assuming DRC stuff comes back online.
Assuming that they export material at around
At the quota.
95,000 tons, the quota level, and it remains to be seen how well that will be.
Yeah.
Is that actually enforceable? Like,
I think jury's out. Some people say it could be quite leaky, but others say that ultimately things are trucked out. There have been pretty robust road checks before that the routes are well known, so I think it can be. I think it can be enforced quite well.
does this actually kind of address the bigger problem though? Because the cobalt's being produced as a byproduct or a co-product with the copper, which is the main reason that these mines are in operation. So the production of the cobalt is not slowing down. The production of the cobalt is presumably still
as I
going at
understand it,
pace,
yeah.
and they're just stockpiling more and more.
It'll just sit in the DRC, I guess,
which will have to
and
come
leak
out like eventually, right? Like when do you see countries impose these kind of export controls? Like how does it actually play out over time?
I mean, it remains to be seen how it'll play out in this setting. But that's the challenge for them. It's going to build up in country unless you actually say no production, please, and they're not going to do that because you want to be producing copper. So you've got to let it out, to the extent which prices are apparently at a level that are supportive of enough revenue for the DRC government without pushing the price too high so that it kills demand or incentivizes new supply elsewhere, I suppose. But that's less of a thing in cobalt because all of the projects and operations are very small compared to the DRC ones. So it's going to be a balancing act. And I think long term, probably not what consumers of cobalt who are already spooked by high volatile prices, already spooked by the association with child mining, probably not what they want to see long term.
So you wouldn't want to be starting a Western cobalt mine anytime soon?
I think there's an opportunity for a Western cobalt operation, obviously, to say, hey, we're supplying what we're supplying. We're not beholden to government restrictions. But the challenge, as ever, is going to be producing at a cost that is palatable to a consumer.
So overrated, underrated?
I think underrated. I think cobalt's here for a little while, right? I don't think that this is a half-cooked plan by the DRC government. I think they've done their homework on this, and I think cobalt's going to be interesting for a while. I remember being at PDAC a couple of years ago, and someone stood up and say the cobalt market killed itself, and I think it's been resuscitated.
Didn't expect that one, JD. Gallium, to pivot another one of those metals that is it a metal? I don't even know. It is a metal. Gallium's a metal. One of those metals that's really in the geopolitical spotlight, and you see it thrown around everywhere. Notably here in Western Australia, there's this recent announcement that Alcoa is going to build a gallium kind of circuit ancillary to their alumina refinery, which will presumably help address some of the lack of supply coming from the West. What's your read on the gallium market, Jack?
It's an interesting one, right? So we're into some of the smaller stuff now. I think this is a 900-ton market or something, so not big.
Funny.
Goes
900 tons.
100 tons.
What does a ton go for again?
I'd have to check. But more in the West than it does in China. I can guarantee that. So it's used in a few things. Semiconductors, obviously, are the key thing that gets lots of attention. It's used in LEDs. It's used in neodymium boron magnets. Used in solar PV as well. So all of those sectors obviously doing quite well with some upside. But very, very small market.
But a growing market, as I was flicking through one of the reports you guys put out, and 12% per annum growth over the last 10 years. So that's a pretty steady rate to tick up at.
Very, very decent rate, but from a very, very small
Low
base.
base.
But
Low base.
It's in all of those cool electronics applications that are sort of driving modern technological transformations, I guess. So Gallium is well exposed to those.
Yeah, and there's no single primary gallium mine. Obviously, at that sort of scale, it's too small to kind of justify. But what you mentioned there, Trav, with Alcoa, that does come with government grants. So obviously, it's a completely, utterly, and totally dominated by China supply chain.
Yeah, absolutely. So it comes out of the bauxite route, ion exchange, from the sort of Bayer liquor that sort of comes as part of the process. So no primary gallium plays, just recovery circuits where historically it's made sense. And Yeah, it's had the same story as antimony in a way, right? So export restrictions in 2023, full-on bans to the US in December 2024. Pretty much trade got back to normal. It makes its way to Germany. It makes its way to Japan. Not too much went to the Netherlands or the USA anyway, and it's not really making its way there now. But yeah, it certainly high prices in the West, and everything related to people being spooked by China has got people exploring whether a gallium recovery circuit at their bauxite operation might just be a good idea. And yeah, you mentioned one here. There's I think Rio Tinto are also looking at something. So remains to be seen whether it's possible, though, right?
Do you worry with this type of stuff where China's dominated it for so long that we don't even know how to build the plant and operate the plant in the West?
I think the answer to that will be different for different metals. But yeah, I think if you solve the capital problem, which isn't necessarily easy to solve, and if you park to one side the idea that you even need to be cost competitive with China, which is another big thing to solve. Yeah, a lot of the expertise sits in China, the IP sits in China, the machinery's probably got a Chinese instruction manual. So I'm not saying that's the case for gallium, and I'm sure the people that are exploring it are looking into this heavily, but yeah, I think a lot of that expertise sits in China, and then you've got to solve some of the other things. So whether it's acid for this supply chain, or for gallium it's chelating resins, can you get that as cheaply as you can get in China? You're going to have to pay more. I think you've got to factor all of these things in, and even if you solve the money, and even if you solve the potential market, which are of course pretty big stumbling blocks too.
Yeah, well, it's funded by government grants, and if there was like an economic incentive to add this circuit previously, why has Alcoa not done it before? I think they've done a lot more work in this area than South 32 has, but I've read commentary from out of Alcoa, like I reckon it's less than 2 years ago, talking about that they've looked into this and they can't do it, and now the narrative's like flipped, and
have to do it.
Well, I'll believe it when I see it and everything like that. And I do hope that it kind of comes to fruition. The one observation with the kind of the gallium froth is there are juniors, mining juniors out there, kind of reporting to have primary gallium intercepts to have a primary gallium operation. Is that like maybe a pipe dream, given where this metal actually comes from?
I mean, it's going to be challenging, right, to do a greenfields primary gallium project versus maybe just putting in an established technology with one of the majors. So I would say if new supply is going to come on, it's going to be one of the big boys, and it's going to probably be using established technology.
Very diplomatic answer.
Never say never, right? But
overrated or underrated on market sentiment versus reality?
I think probably overrated, and different from my last answer. This is a small market, so yeah, it won't take much for a little bit of new supply to really soften things, even if the US-China schism endures. But that could all reset, and it could be okay.
Germanium, even more niche perhaps than gallium. So this is again a tiny market, heavily concentrated. I read somewhere that it's a bit over a $300 million market all up. I'm not sure of the exact tonnage of that market, but
we put it at 330 tons. 330.
330 tons, yeah. So a tiny market. Again, byproduct, 20% comes from lead zinc operations. And like many of the metals we'll speak about today, there's a not insignificant amount that comes from recycling as well. But again, this was grouped with gallium and antimony in that dual-use kind of group of metals where the majority of the use isn't actually in military applications, but a small kind of slither of it is. I want to start with the question, is the fuss over germanium underrated or overrated?
I think it's certainly more rated more significant to Western markets than the gallium situation. I've been in DC a few times this year, and yeah, germanium's the one people are worrying about most. Very small market, and yeah, I think in certain places in the US, people are really wondering where the stuff's going to come from. Not too many options outside China. As you said, there's some in Belgium, some in Canada, but this one could be a bit more real, short term. Longer term, yeah, it's solvable. But
does DC think it is solvable in the shorter term? Just needs the money.
I think it's like right now, yeah. Where could the materials come from for defense applications? So yeah, it's a very near-term priority. Money won't solve, right? You just need access to units. Money will solve things eventually, but in the short term, if there's not a stockpile to draw on, if there's not Western producers that'll sell it to you, then yeah, where's it going to come from?
We could see a handout coming to a small germanium company sometime soon.
It's a possibility, or maybe there's some traders sitting on material. Not sure, but it's
clever
important for
traders.
lots of it's important for lots of military applications. It's optics, electronics, and then various other things, solar, polymer catalysts.
Yeah. Fascinating. That's a market I don't think we've ever spoken about on the show. It's just so
No.
small.
Well, like you say, where are the options to get it from? We don't talk about it because where are the equities to talk about?
It's not going to be a big one for your your subscriber base,
No.
I imagine.
But-
But it's front page news at the moment. So
Yeah.
there we go.
Are some traders sitting on some?
They wouldn't tell me. And if they did, would I tell you? I don't know.
But they're reading your germanium research intently?
Oh,
Yeah.
we're the world's biggest periodical in germanium, so absolutely.
Yeah.
But I think this is a real thing. You've got traders sitting on material, as they do, right, looking to sell into markets, and they're getting a little bit spooked by the idea that the government might come and do something to manipulate these markets and get in the way of their trading, I guess.
Yeah, well, if they're hoarding the metal and that's like the only supplier they'll make a mozza.
I'm not suggesting any hoarding anyway, so we'll see.
Of course not.
Manganese. This is a much bigger market than the rest of the metals we've spoken about to date. 90+% goes toward steel in the production of steel as an alloy there. So yeah, we've spoken about manganese plenty of times on the show. There's that smaller component where people talk about the dream of the battery demand component of manganese growing and growing and growing, but as it sort of stands, it's a small kind of slither of the market. Curious to hear how you think about that battery demand to start with and how that's kind of changed over the last 5 years or so.
I think the battery story is increasingly good news for manganese because it's hedged between the various cathode formulations they'll compete. So it's in NCM, obviously, the NCM. It's in some of the future technologies too, like Umicore's HLM, and increasingly LFP is going to have a manganese component. We expect we're pretty bullish on LMFP. So throw in LMO as well, which is used in I think some power and motive applications. Then it's in a lot of the chemistries. So kind of doesn't matter for manganese which way the sort of cathode split goes. It's going to be there, and then outlooks ebb and flow with energy storage forecasts and EV forecasts, of course, but the picture for manganese sulfate or manganese tetroxide is a positive one. Maybe it's 90, 100,000 tons today, but that's going to, fivefold in 10 years based on our latest forecast, and some are a lot more bullish than that.
And that steel component, like steel maxed out in China a few years back, and it's been inching down as they sort of flood the world with their excess capacity of steel. How do you think about the large portion of the market there?
Well, it's certainly the biggest portion. I mean, manganese is used in all steel, right? It's a 17 million ton market, I think, and whether steel's peaked or it's just plateauing, certainly the trend is flat, if not slightly downwards. So for things like manganese, but also other alloys, whether it's vanadium, niobium, it's all about whether there are new applications that will increase the sort of intensity of use of the element in question within the steel. So there can be a little bit of upside even in plateauing and sort of downwards markets if that intensity of use can tick up.
Yeah.
And that could be a driver.
And on the supply side, we've got things like Groot Island here in Australia that's going to shut up shop in 3 or so years, I believe. So
Keep going.
how do you think about the supply with a lot of the better projects around the world being mined out, similar to like iron ore and these sorts of things? Do you think they just keep going and the grades get ever so slowly smaller, or do we find new production spots?
I think ultimately there are some things reaching end of life. I think, those guys are sort of, 5 years, 7 years? I'm not exactly sure of the number, but that's well stated. Maybe there's more exploration. I'm not sure. I think big picture, abundant reserves in South Africa or other parts of Africa. So the stuff's around, but whether it's existing operations, whether you need to see more exploration, time will tell. But you're gonna see some declines in certain jurisdictions, and that's going to create some opportunities for others.
A lot of chatter about steel. We're talking a lot about steel, aren't we, Trav?
Demand for steel is very important when we're talking about manganese dynamics. And I don't know, I disagree a bit with Jack that maybe steel's plateaued, because all I see is increasing orders for Sandvik ground support galvanized steel bolts, just like this one I got right here, mate.
It's true. Now, that could be people just wanting to get in touch with Derek Hurd and the awesome team at Sandvik Ground Support because they're legends and they're so friendly and easy to work with. Or it could be the fact that mines are going underground, they're lasting longer,
Getting deeper.
deeper.
They need to be safer.
The world needs the metals, and why not use Sandvik Ground Support because they're the best in the business?
They're not just the best in the business, mate. These are galvanised bolts. You know why they galvanise them with zinc?
Because they want them to last forever.
Forever. In fact, they just keep lasting. Just like the name Sandvik, it's going to be around forever. Just like Derek Hurd. He doesn't age. I think he'll be here in 40, 50 years' time.
He's aging like a fine wine, isn't he?
I think he's galvanised.
Fantastic. Thanks a bunch to Derek Hurd and the team. Check him out in the show notes today to get your order in.
On Grid Island, like I remember when Grid Island went offline, like overnight, right? Like 15% of global supply offline overnight. And JD and I just high five and like, yeah, man, like this is the moment. Like manganese is gonna pop. Let's celebrate. And it was like the world's shortest supply shock, and manganese prices did pop, but they just like compressed very quickly. It didn't last very long, and like an observation or reflection from there is it appeared like there was a lot of latent supply that could very like quickly kind of come online to fill that void. So do you kind of like moderate your expectations of elevated manganese prices just because of that dynamic where there's tons that can kind of come on very quickly at low cost to fill the demand that can arise or a supply shock?
I think that's it.
Yeah.
It definitely fell back, and ultimately demand wasn't there. So, that's one reason the price didn't pop for very long. And secondly, there's new supply in a few other areas, and, material sitting at stocks, making its way across the sea at any given point. So it was a short-lived one, right?
Unfortunately.
Is the demand outlook overrated or underrated?
I think underrated for manganese. I think more and more you look at the future of cathode technology. Well, let's say on the battery side, right? So maybe you split that. On the steel side, it's pretty entrenched and it's just going to grow or plateau. But on the battery side, increasingly, I think all of the cathode news is good for manganese, whether it's in novel technologies, NCM, LMFP. So demand growth is going to be there. All of the production is really in China. There's a little bit in South America, a little bit in Belgium, a little bit in Japan based on conversion. So again, opportunity for rest of the world projects, maybe. New supply chains need to be built, but again, they're going to be more expensive compared to China, so that's the challenge.
Some
Another one for steel, niobium.
Niobium. Ding, ding, ding.
You got ding, ding, ding at metal, mate. You own some stockpiled niobium
I'm
metal.
bullish niobium.
Oh, okay, gotcha. The super metal, we like to call it. I think it just makes everything better, doesn't it? Like it just completely transforms how wonderful steel is. Unfortunately, you just don't need very much to transform how wonderful steel is, so the global demand is not very big.
But that intensity, to your point earlier, has increased over the past 10 years, that intensity of use in alloys, like with manganese and others as well, inches up as production quality, as I understand it, needs to rise in China as they become a richer country.
More so with vanadium, but the same is true of niobium. Intensity of use increases over time, and this is a very novel minor metals market, right? 3 major producers, one of whom is obviously a super major in CBMM in Brazil, 80% of the market. There's another operation in Brazil, let's call that 10%, and another in Canada, 10%. And a bit of production elsewhere, but very, very small scale. So I don't think there's a market so dominated just by one actor.
Best mine ever.
Very easy to operate, very easy to make the ferroniobium, as far as I understand, though I'm not a technical guy. So they're sitting on a sweet asset, and I think they've done a great job over a very long time of basically being a PR guy for niobium, right? So it's all just about finding applications, making sure the steel community knew that you can use it for certain things. It sort of sold part of itself to its consumer base, to Asian consortia, so it kind of locked in that steel market. And now CBMM is going after a new market in niobium oxide, trying to muscle its way into the battery story, and you're seeing sort of joint ventures, or at least R&D, with entities like Sojitz and Toyota trying to get niobium into anodes mainly, in combination with titanium. So that's where the potential growth is going to come. CBMM wants it to be, I think, 20,000 tons of oxide by 2030. We're a little bit more bearish than that, but we think it's got a place in the anode story. So it's an interesting one.
Yeah.
Your price forecast for this one, you just hold a straight line and drag right?
I think the price forecast, if you look at historical prices for niobium, it's flat, went up a bit when the big player pushed it up a bit, flat, did the same. So it's that shape. And yeah, it's always been about stability. I think that's what its major producer wants, right? They want a growing market to serve, and they're not therefore about necessarily killing off competitors. A bit of healthy competition's okay. It's all about growing the niobium market, and they've been pretty successful at that so far.
And they spent more than $500 million US expanding the mine just a few years ago as well to expand their capacity, partly to your point on niobium oxide there, which they want to feed the battery market, which again is just a slither of the market today.
And partly just to ensure that stability for the future, right? So they will always stay, capacity utilization is always going to be at a certain level. They're always going to stay well ahead of demand. So yeah, no need to panic. Prices are never going to go crazy. Keep using niobium. I think that's their message.
Yeah, they never run at nameplate. They always run it, and they've got the capacity to inch up if they want.
And they've got another expansion planned, right? So when demand hits a certain level, they'll kickstart that, and they'll always stay ahead of the curve.
Do you model new supply coming online x the incumbents?
We, based on sort of our read of this sort of oligopolistic market, however you'd want to term it, we think that they are happy to entertain a few new entrants, right? So you don't need all of the projects, certainly. But yeah, space for one or two, why not?
Yeah, interesting. We've clearly drunk the niobium Kool-Aid, but
I can imagine which one it is as well.
Are we
somewhere in Central Australia?
Overrated or underrated? Yeah.
Well, I think middle ground, right? It's a steady eddy. And there's going to be new applications, we think, in this oxide stuff and nanocrystalline and other bits and pieces. So I think it's rated exactly as it should be. I'm making a mess of your rating system.
Rated exactly as it should be, which is the best metal of them all. Yeah.
Scandium. This one is a head scratcher. We've seen some stocks, Sunrise Energy recently, just absolutely fly. They did a capital raising on the back of their run, and yeah, a few others sort of playing into this. Rio Tinto came into the market recently, had a pilot plant and scaled that up. They also had a deal with the US government, very small stuff, like $40 million over 5 years, I think it was, to provide supply. But again, it's another one of those markets that just doesn't have a dedicated primary production. It's just byproduct sort of stuff. So how do you balance this all together? What do you think about the reaction in the market and the recent run-ups in some of the equities we've kind of seen?
This is an interest. I think this is the smallest one we've talked about. This is 35 tons, we think, contained scandium last year. So this is a very, very small market. And it's got a little bit of a similarity with niobium, right? Where niobium, you've got one key producer. Scandium, you've got one key consumer. Bloom Energy accounts for whatever it is, 60, 70% of scandium demand. So, that's wild. That doesn't happen in other markets. Production heavily concentrated in China. And apart from solid oxide fuel cells, which account for that Bloom lion's share of consumption, you've got it in military applications, particularly in aerospace and a few other things like alloys. So it's no wonder there's a bit of interest outside of China, Russia, to bring scandium to the market, and obviously Rio Tinto have done that in Canada recently. Back to the same thing, Rio have shown that you can produce scandium at a reasonable cost in a Western jurisdiction. The question is, are people prepared to pay for it?
I mean, reasonable is interesting in this context because they're far, far, far higher on the cost curve than any of the Chinese production. So up until last year, a bit over $500 a kilo.
Yes.
Yes. So an expensive product, but a price that had been falling for 15 years. It had just been coming off.
It's been coming off and coming off. The China price, of course, yeah. And you're right, the new operation is high on the cost curve. But these cost curves, I mean, we've got a scandium cost curve, but it's a difficult one to read, right? Because these are all sort of multi-product operations. So yeah, it must be high-cost scandium. If you balance that out with your titanium business or whatever else it might be, maybe that's okay. But yeah, it's an interesting one.
Overrated?
I think ultimately it's a 35-ton market. New entrants that are looking to bring any meaningful tonnages onto that market need to be very mindful of that, right? Scandium's got this whole chicken and egg thing. We just need more supply and more demand will come. I don't know why Scandium sort of has this narrative wrapped around it, and it sort of flies in the face of sort of economic logic. So I think it's critical in military applications, but currently there seem to have been no moves to make sure that the material's not coming from China. And we're seeing that in other supply chains like tungsten, right, where the US government is mandating that no material comes from China, Iran, Russia, or North Korea. You want a one-word answer, don't you?
Overrated.
Overrated.
Doesn't sound like you'll be putting any money in any of those stocks that are flying. Tin.
Tin, close to our heart again.
Again, we're talking about tin again. How beautiful. So this is, a much more established market compared to many of the ones we've spoken about, but completely fascinating market. The supply side is interesting, from Indonesia to Myanmar to the DRC, and other countries also playing a kind of role. How do you think about tin, Jack?
Yeah, a real steady Eddie on the demand side, right? But it's in so many things that are literally the binding agents of the global economy in solder and electronics and tin plate. So, nothing too exciting, maybe some exciting future applications in lithium ion, sodium ion, but, solid, big market growing at a steady rate. And yeah, as you know, on the supply side, things are a little bit interesting, probably in 3 jurisdictions. So you've got the situation in Myanmar with sort of Wa State Army and shutdowns, and I know you guys spoke at this at length on a recent episode, right? But yeah, I think some uncertainty is an understatement of what's going to happen there over the next weeks and months. So China, Indonesia, Myanmar, the big three in terms of feedstock. So Myanmar interesting. Then you've got Indonesia. That's interesting as well. They're cutting back on some ASM operations. I think they're also going through some approval changes, so you've got that happening. And then I think it was different time zone, so I don't know what day it is now. It was today or yesterday. You've got the DRC government saying for the sort of 3T materials, tin, tantalum, and tungsten, there's going to be a shutdown of ASM material. So that had kind of come off, I think, a little bit with the M23 rebel situation. I know Alpha Min closed down for a little while. So yeah, those 3 jurisdictions, there's some uncertainty on the feedstock side, right?
There is. Do you buy into the hype around the metal that perhaps Trav and I again on this one have drunk the Kool-Aid? Do you think it's as rosy as some people make it out to be?
The price is pretty good right now, as far as I understand it, and I think given the steady demand, the size of the market, and the uncertainty, and not 1 but not 2 but 3 jurisdictions, I think prices could be supported for a while.
It's great commodity use case, just solder of the world. Like, my God, everyone needs more electronics over time, and more and more of the world becomes more developed to want electronics. Like,
do you think there's a narrative for the world being able to make more out of it? Whether it's using hints of other metals or just using less tin to get the same kind of output that could damage that soldering electronic demand side of it. Just trying to hear if there's a bear case here.
It's not a bear case I've heard, but I'm not too close to it directly. But I guess it's been around for a while, right? So that there would have always been an imperative to reduce use if possible. This won't be the first time in the tin market that supply is a little bit uncertain. So
yeah, the intensity's definitely diminished over time. However, you reach the limits of physics at some point, and you just have to accept
using it.
Yeah, exactly. Tungsten, rounding out another one of those T's. Tungsten. All I know is I want a tungsten cube on my desk. Those things are sick. The densest metal there is. It's just, you feel tough with tungsten.
They've all got their superpowers, but yeah, tungsten's a good one. Right?
Tungsten's a good one. Yeah. What do you think of tungsten, Jay?
Again, a steady Eddie on the demand side, right? Carbides, mill products, alloys, the stuff that goes into the machinery that fuels global production. So very, very solid. And yeah, on the supply side, I guess a little bit of uncertainty. Big question mark over China, right? We've sort of had talk of declining production, declining grades. There's also talk of some exploration in China. So I think that's the kicker. Will China start to dwindle and create more opportunity for rest of world production, or will it find new resources and continue to dominate to the extent that it has for so many years?
Is the tungsten price structurally higher now? Can we because it's like tripled in short order, right?
It's at a record high.
Is that something that like you I think of the equities, and Almonte's been this like super performer, phenomenal low cost mine in Korea of all places, I think, and then you've got the likes of the more like novel producers that we come across in the ASX who are actually kind of washing their face for the first time in a very long time because the tungsten price is so constructive. So can we actually expect that they'll be profitable producers that are of these higher cost assets for a while, or do you sort of see downside to price around here?
I think probably longer term, there's likely to be some downside. It's an interesting supply picture right now because you take China away, and there's quite a few actors that are producing similar-ish levels. So sort of production, here, production in the Iberian Peninsula, some places in Southeast Asia. So all of those will have different economics, and maybe we'll find things a little bit challenging if prices recede a bit.
A lot of these metals have recycling as a part of their broader kind of supply picture. Is that a big component of tungsten or the likes, or?
Yeah, carbide scrap.
Is this one, you'd mentioned the US really trying to break out from China and separate themselves here. Are you expecting kind of more intervention from the US in tungsten?
Well, I think it's a yes and no with the separation, right? So there were some restrictions put on imports from China, but it didn't include the main tungsten-bearing chemical that the US consumes, right? So those are exempt. Nevertheless, some restrictions of material going into the US, and it seems that this is the one, January 2027, no tungsten from certain jurisdictions allowed in US military supply chains. I think it's always interesting, why is that the case for tungsten and not scandium? What sort of pathways have led to those decisions, and are they joined up decisions?
Yeah. You'd have to hope it's an understanding by the government of where the deposits lie, whether there's actual feasibility of incentivizing supply chains to kick up, and in some cases realizing it's just not. But that's me.
Well, I think that's what you can't solve for a lot of these things. You can solve for some of them. So there surely is an expectation that de-Chinaing themselves in terms of military supply chains is possible, and then it'll be interesting to see if that happens in other supply chains too, because there are some that the US could really decouple from China on in certain small military segments.
Yeah, definitely. So you bullish the tungsten narrative?
I think for a little while, things look pretty good. Longer term, I think all depends on China, right? If China brings on new production, then there might be a bit of a softening. And geopolitics is the wild card. It depends how much it impacts the market.
Last but not least, vanadium. This is one that has been around quite some time. Vanadium redox flow batteries are a pretty known sort of substance around the world. Whether they have growing use in their sort of longer form stationary storage is an unanswered question at the moment. But what do you make of the state of play in the vanadium market, Jack?
Sure. Well, it's a steel market again. 90% goes into steel. There's some stuff in alloys, but it's these VFBs that are really getting people's attention, and probably been quite not bearish, but I think conservative on VFBs for a while. But they really are taking off now. But at the moment, it's in a Chinese context. So China dominates production of vanadium in terms of feedstock. It dominates production of vanadium pentoxide and ferrovanadium, but it's also dominating production of electrolyte and the batteries and the installations. So a big China story. We do expect VFB demand to, I'll say, not boom, but certainly continue to swell in China over the coming years. There's a new announcement every few weeks, and these are big batteries, and these batteries consume a lot of vanadium. So it's pretty exciting for the market. The question is whether this can happen outside of a China context, and that's what people are trying to prove now.
At some point, the demand from the vanadium flow batteries will usurp the use case in steel, right? At what year do you project that to happen on your numbers?
Right now, I think that would take another 30, 40 years at least based on our numbers. But you've got that intensity of use in steel story again. So that pretty much depends whether other big economies sort of mandate the use of better steels in construction, right? You could see more of that in places like India. So you could get a bit of a stay of execution for the size of the steel market. But long term, it's batteries, and it all depends on those battery energy storage system projections and the slice of the pie vanadium redox gets compared to lithium ion.
Unfortunately,
and other things.
Yeah, and with vanadium, it's unfortunately one of those commodities that's largely a byproduct or a co-product of a lot of other means production of other metals. So it can be the case that there's quite like a constructive outlook on the demand side, but price might actually not be as like sexy given that demand outlook because of the byproduct production.
Yeah, it's an interesting one, vanadium. So we call it co-product, or that's the industry standard. I don't know why, but yeah, 60, 70% is based on the idea that a VTM, vanadiferous titanium magnetite ore, is used in the production of steel. Vanadium reports to the slag, you take it out. That happens in China and Russia. There's some primary production in Brazil, some in South Africa, but that's fallen back a little. And obviously lots of primary projects in Australia and other places. So that landscape could shift as well. But I think, as you point out, a lot of supply depends really on iron and steel dynamics rather than on vanadium dynamics. That said, China looks very interested in this battery thing, so we do expect the demand to take off. So it does create opportunity. And yeah, the question is, even if it takes off in China and nowhere else, does China manage to produce enough of that vanadium itself, or will it look to be maybe a bit of an importer of that material, which could also create an opportunity for projects?
Is the outlook underrated or overrated?
I think underrated for vanadium. I think it's been in the doldrums for so long because of the steel market. There really is traction for demand, and that's not being reflected, I think, in prices right now. So I think it's going to have its day in the sun in a few years. Ultimately, it's now or never for vanadium redox, I think. Prices have been low, which should help commercialize the batteries. There's a lot of interest in battery energy storage right now. So I think it's got to find a greater commercialization over the next few years, or maybe another technology takes its place, or lithium ion endures to an even greater extent.
Fantastic.
Brilliant, Jack. I can't this has been great to talk about all these niche metals that we've very lacklusterly kind of even talked about, because a lot of them are a bit of too exhausting to really study. So I'm glad that I now know at least 2 or 3 dot points about each.
I feel smarter for it. Appreciate you making the time and joining us, Jack.
Before you go,
yeah,
what's your most non-consensus view on any commodity?
I think one of the things at Project Blue that we've been looking at is copper, which obviously is getting a lot of attention right now. And I think an interesting thing for copper, because obviously there's lots of copper bulls talking primary supplies, the extent to which scrap is going to play a part of that. I think maybe an understanding of the scrap market is lacking in certain segments. So I think that's one to watch. Interesting.
Do you model like technological improvements to extract kind of like, copper from like tailings or heap leach or whatever format?
I mean, we try and go into the weeds sort of asset by asset.
Yeah.
So it's a consideration where possible.
Love your work, Jack. Really appreciate your insights. And hopefully our audience gets a bit out of learning a bit more about these 10 niche commodities. Thanks so much for joining us. I hope Australia flogs your country in the Ashes, which start on Friday.
We'll see. It's going to be a spicy one.
Thanks, Jack.
Thanks for having me.
Big thank you to Jack for coming on and sharing his wisdom, all made possible thanks to the champions at Sandvik Ground Support. Check them out in the show notes. Also, a massive thank you to Intralinks, and last but not least, Focus, the platform by Market Tech. Hootaroo.
Now remember, I'm an idiot, JD's an idiot. If you thought any of this was anything other than entertainment, you're an idiot and you need to read our disclaimer.